I was like the worst candidate ever going from the Army to business school to banking. I had no idea how to network, didn't even realize I had to do it. 99% is not good enough. It's never good enough.
I disagree with you.
Sitting here today in 2025, we have a lot of resources at our fingertips.
I'd love for you to kind of think, is there any advice you'd give?
The goal is not to get the private equity offer. It's to do well.
All right, Jonathan, thanks so much for taking the time to join us today.
Yeah, great to be here. Great to speak with everyone, and more importantly, it's great to be one of the head mentors in the program.
Yeah, we're super excited to have you. Your background's obviously super impressive. I'd love to just give the listeners a short summary bio, where you're from, and then kind of how you progressed through your career real quickly.
Yeah, no, happy to do that. So I'm coming to you from Houston today, just where I live. I'm originally from Louisiana. Did my undergrad at West Point. I studied civil engineering, so not a finance or accounting major, out of the gate.
Happy Veterans Day.
Well, thank you. Thank you very much. So by virtue of being an academy graduate, served 5 years in the Army, had the greatest job in the world. They used to jump out of planes and blow things up. So like all good things, though, that had to come to an end. Wanted to do something different. So I applied to HBS and was accepted. And I went there with the intention of becoming an investment banker, which I did for 10 years, right? So 6 years in New York, 4 years in Houston. Then decided I wanted to do something different. So spent 3 years in wealth management. Realized that wasn't the right thing for me, but I did enjoy it, and I did learn a lot. And I kind of stumbled on a role at Wells Fargo, which I was in for about 8 years until I recently left, where I managed all the junior bankers for the energy and power group for both corporate and investment banking at Wells. So, I had 80 direct reports and about another 20 to 30 indirect reports spread across the country. Also included a small team up in Canada that I helped out with. Nice. And basically, I worked on everything that the junior bankers touched throughout their time, right? Whether it's, from the recruiting side, I interviewed a ton of people, gave a lot of career advice. I ran the summer internship program for the team. Worked on, compensation and bonuses and promotions. Did some staffing.
This is going to be fun. This is going to be fun. You had to be staffer. You got to choose bonuses. This is going to be great. Yeah. So.
Yeah. There was, some of that stuff was more fun than others. It's obviously great rewarding people for a job well done. It's not as much fun to have difficult conversations with people who need to work on a few things or aren't performing at the level that we expect or quite frankly, that they expect. I also got to be their supervisor from a FINRA perspective, which is a whole other challenge in itself.
Awesome. So let's start all the way back. Just, the idea, going to being an engineer and going to West Point and, was finance even on the radar at this stage at all? Like, did you know anybody that was at all in finance, or was this just like not?
No,
even?
I mean, growing up in New Orleans, there wasn't any kind of a financial services presence, or not one that I knew of. Didn't know anybody in
New Orleans every year because my grandmother's there. Not my great. She's as old as she's 98 right now, so I'm there every year for Thanksgiving or Christmas typically. And then my parents met in Tulane, so I love New Orleans.
Oh,
yeah,
very, very nice, very nice. So yeah, I mean, banking wasn't anywhere on the radar. I didn't even know it existed when I was in school. But, I was at one of the best engineering schools and said, you know what, they have a great engineering program. So studied civil engineering and became an Army engineer officer, which is how I ended up in that really fun role of jumping out of planes and blowing things up. It wasn't until later when I was in the Army that I even knew investment banking existed. I happened to read about it on a website that's probably long gone now, because this would have been probably in about 2001 that I read this. And I immediately said, that's what I want to do. I want to work on IPOs and do M&A.
So you had been doing the Army thing for several years. Then you just stumbled across a website one day in between jumping out of airplanes and just said, oh, you know what, investment banking is my future. And that was it.
That's pretty much how it went.
Yeah.
I had to have a conversation with a senior officer because I'd expressed interest in leaving the Army.
Sure.
And as part of that, I knew I needed to be prepared for that conversation, at least have an idea what was going to happen or what I would be interested in.
Yeah. Talk to me about that decision. Cause you did 5 years, right? So at this point you're what, 27 years old or so, or like around there?
Yeah. So this would have been late in 2001, but before September 11th.
Interesting. Okay. So I mean, a really interesting time to be leaving the Army. A lot of people were kind of
and look, from a broader perspective, I couldn't have picked a more perfect time to serve in the Army. Because I got to do some really, really great training, had some phenomenal experiences, worked with some really great people, but that was all before the war on terror.
Yeah.
And so, I was on, thankfully, I know I was never deployed to a combat zone, but got to do a lot of really, really neat stuff. I have a lot of great experiences.
And so kind of as you're making that decision of transitioning out, tell me about are there supports internally on that transition? How are you thinking about HBS and your business school applications? Was it like Harvard or bust? Did you apply to all the M7? What was your thought process there? Because you said, okay, investment banking is what I want to do. My guess is you saw that the MBA was probably a good way to go. So talk to me about that.
That's right. Yeah. So, sitting here today in 2025, we have a lot of resources at our fingertips. Right. But you got to go back to 2001. It's dial-up internet.
Yeah.
I had never used Google before. This was, Wall Street Oasis hadn't been formed yet.
No, we were 5 years away from being born. Yeah.
That's right. And so I stumbled upon the Vault Guide and ordered a hard copy, which took forever to get to me. I actually had a physical book and read about banking. And the more I read, the more interesting I thought it was. In the back, it listed all the big banks. I realized then that I probably needed to move to New York City. And it also listed all of the schools where the banks recruited. And so I made a list, and Harvard was at the top, and I was able to track down a few other academy graduates who were in business school or recently out of business school. They gave me enough guidance, and I was able to do enough research on dial-up internet, I guess, to write some compelling essays.
Nice. And so you get accepted to HBS, you're attending. At this stage, do you feel ready for recruiting, for investment banking recruiting? Because there was no Wall Street Oasis, there's no interview guides. Did those mentors of yours, the people, were they grilling you at all or telling you to prepare at all? Or how did it, obviously back then they weren't recruiting you so early, and tell me a little bit about that process.
So I was probably the worst candidate ever. I did not do a great job.
Not a finance major.
Not a finance major. I loosely knew about banking. I thought I knew a lot about banking, and just wasn't really ready for the recruiting process as a first year. Now, one difference is, the MBAs today, and if there are any MBAs listening, you probably know that the minute you get on campus, right, you're going to company presentations. We at least had about a month. Now, I won't tell you I took advantage of that month to talk to my classmates, right? I had a lot of classmates coming from banking, which is something you don't really have much anymore, in the MBA programs. But I'm not sure I took advantage of that time. But again, I was the worst candidate ever. My resume was phenomenal for someone who wanted to get a job as an Army officer. It was not the kind of resume that you look at and say, oh, this is a banking type resume. I had no idea how to network. Didn't even realize I had to do it. Didn't know how to, make outreaches to people. Didn't know how to start the conversation or ask for help, particularly about people, from people that I didn't know or didn't have some sort of connection to. My technicals were probably okay because I was so focused on it, but I'm pretty sure I sounded robotic.
Yeah. typically you focus on what you're most scared of, right? So as an engineer, you're like, I need to know I need to know the technicals.
That's right. And at least I had, I had done some, mathematical modeling, not necessarily financial modeling. Math, going from engineering rules to finance rules kind of made sense to me. And I had no clue how to do behavioral prep or that I even needed to do it. And so, you think about a program like the Academy. I mean, that would have been the perfect program for me. Unfortunately, you all didn't start for several years after, as you mentioned, but having that structured approach that you provide, as well as blending that with practicality of how do you actually do it. And here's how you sort of track, who you've talked to, those sort of things, so I struggled through recruiting that first year. It also happened to be at a time after the tech boom and bust where, banks weren't really excited about staffing back up. They were, they had seen deal volumes drop pretty significantly and were cutting back on staff. In my second year, I happened to stumble on some great mentors who really helped me out. One of whom, I did a summer internship at GE, a small business here in Houston, and the HR manager there, who was not a banker, didn't have a banking background, but he was a former Army pilot. The first thing he said to me, not hi, how are you? How's it going? He said, we've got to fix your resume. And so, that resume review that I should have done a year prior or 9 months prior, he did for me. And then in my second year, I actually stumbled upon a mentor who I still talk to today. I actually emailed him earlier today. He was a Navy guy, kind of taught me how to network, how to really make sure my technicals were good, and other things. So it's really been nice, given the way I started, to be able to kind of pay it forward and help people out now.
No, we love that. And so, talk to me a little bit about like that. So that first year you said you struggled. Were you like, did you apply to every single place that was coming on campus and just got like no interviews? Did you get like a handful and struck out? Like, what was it like?
Yeah, I got, I think I probably had 3 interviews or four interviews. I take it back, 3 in New York and 1 in Houston.
Yep.
And no second round.
No second round. Okay.
No second round. No super days. I will tell you, the next year, now there was also a big change. There was a change in me and a change in the banks.
Yeah.
Between my first and second year, banks realized that they weren't ready for their full-time class in 2024 after their 04 versus the 03 summer. So they came back
to hire
to campus looking to hire, knowing that they had holes. They didn't hire big enough summer classes. But at the same time, I did a lot of work, over the summer when I knew I wasn't in the internship that I wanted to be in for full time. Spent a lot of my time networking, researching. Turns out the more you do it, the better you get. And like I said, got some good mentors, and really worked on that. So had much better luck than my second year.
So that second year, which is pretty atypical, and usually for MBAs, if you've missed that summer associate role, you're kind of out of luck at that point. It's very rare for banks to come and have any sort of meaningful volume of hiring kind of in that second year, at least from what I've seen historically. Right. Of course, there's exceptions like 2020 when deal volume was exploding and all that. So talk to me a little bit about just so your improvement happened, but was it like you got another 5 interviews or you got another 2? What was it like? And then how many?
No. I went from probably 4 interviews to maybe 25.
Oh, okay. So you really
first round. And I got several final rounds.
Nice. It's a huge difference.
And yet, however, I did have trouble getting the final offer. Right. So I at least moved myself through that process. Just I was having trouble getting over the finish line.
Yeah.
At the last minute, I ended up with, two offers, 2 very good offers to choose from. And then 2 kind of, maybe best to call them like soft offers, or like, hey, let us know if you want this, sort of thing. So,
you mind sharing what those were and then the thought process of deciding which one was right for you?
Sure. And actually there's an interesting story around the one that I actually ended up taking, that probably might resonate with some of the people who might be listening. But, I took my first role. The one I accepted was at an M&A boutique called Dresdner Kleinwort Wasserstein, which is it's long gone, but it was what was left over of Wasserstein Perella, which is a very, very known great firm. I chose that in New York over what was then, again, we're going back in the vault here on bank names, but it was Piper Jaffray in their healthcare team in San Francisco. They were phenomenal. I won New York over San Francisco, and then there were two smaller banks in less desirable locations that was easy to eliminate from the list.
Awesome. So you get to New York post grad, you're kind of thrown into the associate role. All the preparation you had done with the networking and the technicals, did you feel like you still weren't ready when you hit the desk there, or did you feel like was the learning curve not as steep as expected? Because you still didn't have the finance background, you still hadn't done a deal before. It's not like you came from an analyst thing. So talk to me a little about that year at Dresdner, and then why the quick move to UBS.
Yeah. So one thing I would just say, the second year at HBS is all electives, or at least it was back then. And so I chose nearly all finance classes, knowing that, I still wanted to make this career transition. So what I would say is when I got there, I knew a lot of theory. I knew a lot of classroom type stuff. I knew a lot of, I do think looking back that the case study method is very helpful. I didn't realize it at the time. What I didn't know was how to do anything, because banking is a lot of process.
Yeah.
Now the process relies on you having strong technical skills, being able to do the models and other things, but there's still a process of just getting used to how things run. And I think that's true no matter where you go in any industry. You just have to get used to how things are done. Also in banking, it's probably different than other industries. The standard of excellence is just uncompromising, right? 99% is not good enough. It's never good enough. Yeah. And just understanding those expectations and learning how to meet those expectations, that's certainly part of the development. So I was very fortunate. I had a great mentor there. He was a former, actually M&A lawyer. I think he's still in the business. But he was an M&A lawyer turned banker. He was a great mentor to me. And then one day he came to me and he said, "Hey, so I'm sitting on an offer from Lehman and another in the vault of old banks. I'm sitting on an offer from Lehman and I'm going to take it." So I had already at that point been talking to UBS, and you have to think about this in a historical context. In 2005, UBS was really a phenomenal firm. It was doing great things. Ken Moelis had not left yet to start Moelis and Company, and he was running things.
Yeah.
So I ended up moving, a few blocks away to UBS and joining their power and utilities team, where I ended up staying at UBS for 7 years.
Yeah, it's definitely a good run. I'm curious, when you say, you were talking with UBS, when you had joined Dresdner, was there had you made it to a super day at UBS, and so you're really close with some of the people there that you had interviewed with? Was it other HBS classmates that ended up there that were talking with you?
No, pretty interesting story. On the first day of training, I sat next to one of the analysts who told me he was the analyst for the Dallas office.
Okay.
At Wasserstein, and we became friends. And then at some point in that year, we shut down the Dallas office, and he moved to the UBS's Houston office, and he called me. He said, "Hey, UBS is great. Yeah, you got to come over here. And they know all about you. They know you're from Louisiana, and you'd like to get to Texas." And
nice.
So took a little time, but it all did work out.
So when you made that transition in 2005 after a year at Dresdner, was it a jump down to Houston, or is that when you moved?
No, it was to New York.
To New York.
I stayed in New York for 5 years, and then moved with UBS.
And you were in power and utilities for the most part there.
For the 5 years in New York was power and utilities. Then I moved to energy.
Yep. Okay, so talk to me about just the transition from associate to VP in power and utilities in New York at UBS during, we'll call it more of like a heyday when it was like you said, it was doing really well. And talk to me a little bit about, just like everything there in terms of like trying to even get promoted, because the transition from associate to VP, I think, is very difficult.
That's right.
Yeah. So talk to me a little bit about that.
Yeah, it's one of the, from the day you become an associate, right? You're it's like you're trying to become the VP and show you can do more. And obviously, first you have to learn how to do everything, and you have to be able to do everything that the analyst does, and then some, right? And work with product partners and do a lot more in the way of communication. Associate job's a hard job. So what I like to say when I'm talking to people, who are looking to get promoted, and for the last 8 years, I got everyone's staffing sheet, right? Every week they send me their staffing sheet, and the associates would have, call it 20 projects listed. But in reality, I knew they were kind of working on 3 or 4, maybe 6, depends on, the stage and what they're working on. Sometimes I'd only be working on 1 if you're at the critical point, maybe in an M&A transaction. And what I tell them is, look, you go to VP, you go from 4 projects to 20. And oh, by the way, you're doing that from a plane or a hotel in Chicago or in transit to Tulsa or something like that. So, you have those associate years to get as many reps as you can. Make sure that your skills are absolutely perfect, because there's nowhere to hide when you're a VP. When you're an associate, even a senior associate, you're still kind of seen as, you're the associate. The VP is going to be, kind of your safety net. When you're the VP, you are the safety net.
Yeah.
Right. And so you flip that around. So how do you get promoted? You get promoted by making that VP irrelevant for the right reasons, not by leaving them off of email strings or going around them, but by getting the work to a point where when you give it to the VP, the only thing they're going to add is maybe some wording, or maybe they got an update that they haven't given you yet, or something like that.
Yeah. And so talk to me about that, because I feel like, especially at the VP level, when they're trying to prove themselves, it can be considered a very sharp elbow industry where there's a lot of hard driving people that are trying to get promoted, so it's very competitive, right? So you have a set of people who already tried really hard to get in. They're pre-selected. They're typically the best. Then you have all these people who've then been selected again and narrowed down again for the associate role.
That's right.
And then again, so you're at this stage, I guess what I'm asking is, on the political side of working through things, how much is luck? How much is just positioning yourself well, and that networking that comes in handy in building those relationships? What do you think?
Yeah, it's all of the above, right? Not to use kind of a cop-out answer, but that pyramid gets really steep.
Yeah.
As you go up, at every level you're being assessed for can you make it to the next level, and in every jump, every promotion, the skill set that you need changes, right? It's not that a VP is a super associate. If a VP is a super associate, he or she's not going to be a great VP, right? They're going to, they need to be more in the way of driving content, keeping all those 20 projects that they're working on moving, right? Those kind of things. And starting to, work on client relationships, so that while they're assessed for, director or executive director or managing director, people are saying, hey, do they have these skills? Are they showing an aptitude for what they're going to need to do next?
Yeah. And in terms of timeline, is it still typically 3 to 5 years as an associate? After 5 years, if you're still an associate, is it considered that's it?
Banks are still pretty much in that 3.5 years. You come in and they call you all kinds of things like stub associate for that first half year, and then kind of 3 full years. And it's funny. It goes slow while you're going through it, but it goes fast, when you're looking back at it. And you're right. You made a comment earlier about some timing and luck. As a VP, it's much more important which senior bankers you're aligned to, and which clients you're helping to cover. And again, some of that is luck, but it's like in anything, the better you prepared you come in, And I always tell people, don't prepare for the interview. Prepare to be a good analyst or a good associate, right? Look to the job, not to the interview process.
Mm-hmm.
But the better you perform at any level, the more people are going to want to pull you onto the better projects.
Yeah.
Right. The more you're going to get, they're going to try to get you exposure. They're going, because they need things done. Right. They want to make sure they have high quality execution, for their clients. And once you prove that you can do that, people are going to ask for you.
Yeah. And I think just when the interns, especially on the analyst level, are trying to get the return offer, that clearly is what differentiates you. Like if you have a good reputation that first few weeks, it's such a short, it's like a 8 to 12 week interview process, right? Where it's like super intense. It's interesting that you said that like you want to work towards being a good analyst. I 100% agree with you once you have the intern offer. I disagree with you if you're saying to get the job, because oftentimes I'll have students coming into Academy and they're like, what should I focus on? And they're like, I'm going to attend these boot camps and it's a set 18-hour boot camp. I'm like, you know what? You need to be focusing on like nailing the interview and your interviewing skill.
Yeah, I think your answer might be a little more nuanced than mine. So I think I agree with that. But
to actually survive and get the return, 100%.
Mm-hmm. And so for anybody, thinking about their internship this summer, whether they're at the analyst or the associate level, right? I mean, you got to be thinking about how do you, again, once you get that offer, be thinking about the preparation doesn't stop the minute you sign that offer letter, right? You still have another semester of school, right? Which you're going to need to have. You need to continue networking. You need to keep brushing up on your skills. To the extent you've noticed any weak spots in your preparation, maybe you slipped through because someone didn't ask you something you didn't know about. Hey, brush up on it. Don't wait to make the mistake in that sort of 10-week live interview. Address it ahead of time and be ready to go. And then once you're there, it's time to work, right? You gotta be a doer. You need to take ownership of everything you do. And the other thing is you need to make sure you meet the whole team. And I think you see some interns, they're so focused, maybe put the headphones on and sit at their desk and they're cranking all day. And we want people to do that. But we want to know you as a person. We want to make sure you're interested in the team and getting out and talking to people is really, really the best way to do that.
Yeah, I agree. I think it's interesting because we'll see sometimes students, they're just hyper focused on networking or relationship building only when they need the offer, only when they're trying to get that internship offer. And then once they get the offer, they just stop completely. I'm like, it's okay if you slow down a little bit. But really I think the best time is when you don't need something immediately, right? Just because then it's less transactional, right? So,
and look, and it starts simple. A lot of times when a team makes an offer to you, people will reach out and say, hey, congratulations on the offer. Or maybe if you accept, they'll say, hey, welcome to the team. Looking forward to working with you this summer. Just reply to those emails. Someone leaves you a message, call them back. Right. That goes a long way, right? You're trying to establish relationships with people who you want to fight for you at the end of that internship.
Right. Exactly. Yeah. Very good advice. So, okay. So you mentioned something about you got to be ready to work. Let's talk hours. So when you were there from 2005 to 2012 at UBS, were the hours, was deal flow ramping up, getting crazy, or was it pretty reasonable? Were you guys understaffed, overstaffed? Tell me a little bit about.
You could actually break that time period into a couple sub periods.
Yeah.
Because from 2005 until, probably mid 2008, things were rocking and rolling. A lot of deal flow. The sector was still trying to ramp up in terms of hiring people. There was a lot going on. The hours were pretty tough. The banks had not yet put in place many of the programs they have now around quality of life. So
you didn't benefit from that. You were.
I did not. The first protected weekend I ever saw was when I was my first weekend on the job at Wells when I was managing people who had protected weekends. So
it wasn't for you.
I had luckily heard that they existed, but it was a different time. And that's not to say we were better off for simply working more hours. Some of it is technology. Technology's gotten a lot better. When I started as a banker, my first laptop I could physically take home, but I couldn't log in outside of the firm.
Yeah, because
Right? If you were going to work on a client's site, IT had to come in and modify your computer. Right.
Yeah.
And then I went through, okay, you could log in, but you can't access folders, and you can't access, certain websites to, you fast forward to today, the only thing you really can't do from home, from a technology standpoint is print. Right. So some of that difference is due to technology. You've also seen a wave of offshoring that happened in kind of the 08, 09 timeframe, where banks started working with teams in India to take some of the repetitive work, off of the analyst associates. As the India teams have gotten better, their scope has increased. Right. So they're able to help out.
Yeah, let's talk about the great financial crisis, because you mentioned a mentor kind of went to Lehman. So was Lehman, or talk to me a little bit about, like, it sounds like it was super busy. Great financial crisis hits in 2008, right? When things really kind of went south. First off, how did you survive that? I see there were some big layoffs.
Yeah.
And
no.
Talk to me a little bit about, like, what it was like, because I'm sure there were some details.
No, it was certainly a crazy time, and not what I dreamed about when I was in business school trying to get into banking. It was a very, very stressful time. Everything was really busy up until 08, and then at the end of 08, things kind of, fell apart. Late 08 or early 09, you had some people who got really good bonuses. And by the way, from a revenue standpoint for banking, it had been a really good year. And so,
you mean
in 08, and some of it had to do with when some of the banks closed the books before they became bank holding companies. Again, another legacy of the financial crisis. But so you saw some people with really high bonuses, depending on what firm they worked at. And then you had some firms where, as a rule, they were essentially, zero bonuses. So I was a first year VP thinking, all right, I made VP. This is my year to get that first VP bonus. And it was disappointing, but at least I got to keep my job. It was very stressful. You wake up, it seemed like you wake up and you look at the headlines, and another, a bank has failed. Fannie and Freddie are in conservatorship. AIG had to get a bailout. The car companies needed a bailout. Someone made the observation to me that the financial sector was trading an option value. And when they said that, and it was like an eye-opening. Well, what do you mean? Like, what do you mean there's no value in our sector? It's all option value. I mean, that was was really, really hard to hear, really, really shocking. And, I think I was pretty good. I don't know that I was a standout at the VP level. I think I was pretty good. But, you look around every day and there are people disappearing. Now we had a lean team, so we didn't have much to cut.
There was enough kind of deals still moving along.
There was enough. Especially for our sector in power and utilities, there was enough in the way of bond refinancings and capital markets activity to kind of keep us afloat for a little bit. But it was tough. It was tough out there, and there are a lot of names, a lot of great firms that just aren't around anymore, that just didn't make it through that period.
Talk to me a little bit about when you started feeling more safe. Like, because there must have been some time where, like, am I gonna, like, are we all going down? Like, in the like, was it 2009?
I don't know if I ever felt all that safe. There was a time where we were clearly past the worst of it, and I don't know that I remember the exact moment, but there was a time where, like, the high yield markets opened back up, for example, or there was, it's probably selective memory that I can't recall it, now, but there was, all of a sudden you started to get some good news, and now all of a sudden we're busy again. But it was a really tough time to work through. And like I said, it sounds great to go, oh, such and such a competitor left or is crippled, but that market share that you might gain picking up pieces from them, that's it's more unnerving to see them, them go.
Yeah.
So whether it was Lehman or Bear Stearns or
Yeah.
or others, it's tough to see.
And so you kind of still had several years, I think 2 or 3 years after the great financial crisis at UBS, now in the VP role, or eventually director role, it looks like. Talk to me a little bit about that transition from the VP getting to director and what you think to get there. Were you generating your own business, your own clients? How do you even make that transition? Is it natural because you're talking to enough clients at the VP level, or what happens?
Well, so one interesting thing about the titling convention at UBS at the time, and I don't know if they still do it, is directors what they called their VPs.
Okay, fair. So VP is kind of where you were. So it's one step above the.
Yeah, that's right. And I always said that I was kind of best at sort of that senior associate, junior VP level. As I got more senior and it started to get more into that client, the kind of calling on clients and deciding what goes in pitch books. That was kind of where the first part of my banking career kind of topped out. That wasn't my strength.
I think it's super fascinating though, because you often do see this dichotomy between people who are sometimes like the best associate, but then they're not cut out for like a managing director type. Right.
That's right. That's right. Yeah. Like you mentioned before, every time you get promoted, that skill set changes, right? Yeah. And the job description changes.
That's what I was going to ask. How did you pull that off? How did you pull it? Because I think it is so rare. It's very difficult. I mean, obviously there's not as many director or managing directors and partners and whatnot. So for that exact reason. So, okay. So you're there, 2012 comes, you decide, you know what, I'm making a change or something happens. Talk to me about that next transition. And you had a couple hops after that as an executive.
Yeah. I spent some time at a few boutiques in Houston in the energy space. And, at that point, I came up on the 10-year mark in banking. It was almost 10 years to the day. And, wanted something different. If you think of the average career in banking, being kind of in the 2 to 3 year range, right? We're talking, 3 to 5 careers in that standpoint. Add in the financial crisis. It was just time to do something different. Tried out wealth management. That wasn't for me. But
you were at Morgan Stanley, right?
I was at Morgan Stanley. Yep, yeah, that's right. I had a family friend, who's in the business and joined his.
Was that difficult or pretty easy to go from banking to wealth management? Just because
it's a different focus. Going from, really being an expert, at a sector and understanding all the companies to try to be on the buy side and attract assets and then actually, invest, right? It's a very different, different skill set, very different focus.
When you say wealth management, this wasn't private wealth management, like high net worth individuals, or was it like you're serving hedge funds?
It was more, it was individuals, families,
okay.
that's sort of.
Isn't that's like a sales role, really, right? Like, isn't it a lot of it like
there's some sales and some asset management? Yeah. It was an interesting mix. And so, like I said, I learned a lot, and I'm glad I did it. It wasn't for me, and I knew I needed to move on, and I ended up kind of stumbling on the role that I ended up in at Wells, where I kind of looked at it and said, wow, like how perfect is this? Managing a bunch of bankers. I'd been a staffer 3 times in my time at UBS. I'd been a COO for a period of time as well during kind of a transition period.
Yeah.
And, and it's like, add that to sort of my military background. Yeah. And I missed that investment banking culture and that environment.
Yeah.
I missed working with really smart people. It's not to say I didn't work with smart people in wealth management, but solving, really complicated problems for top clients.
Yeah.
And so that role kind of, nothing's perfect, but it was pretty close to it.
So it was awesome. So you found that through a recruiter, or like your wealth management, let's say it's your 3rd year in wealth management. What happens? You're like, I really need to get back to banking or something related to it.
I didn't know what I didn't know that that I needed to get back to banking. In fact, I didn't want to get back and be a regular coverage banker, given, that I realized I didn't want to be leading client relationships, on the banking side. I knew I want to do something in finance, be something a little bit more hands-on. And so I may have stumbled on the role on LinkedIn. I'm not, it was somewhere. And I happen to have had a friend who I'd been friends with, still friends with him today, by phone for 15 years at that point. And he worked at Wells, and I called him up and said, "Hey, I see this thing. Like, is it real?" He's like, "Yeah, it's real. And if you're interested, I'll walk your resume down the hall." And like 2 weeks later, or 3 weeks later, and that included Thanksgiving week, I was starting there. I mean, it came together real quick.
Yeah. Talk to me about the role, because it's a development officer. So
That's
like
right.
you're former managing director, development officer. So it was in the energy and power side in Houston. So, but you were managing this whole, talk to me what that means. It's like, were you basically de facto staffer, or were you like just training? Like, what was this all entail?
Yeah. I mean, like I mentioned, like everything that the junior bankers touch. So I was a managing director, but did not have any client responsibilities.
Yeah.
Right. So, it was a pretty big team. The day I left, I had over 80 direct reports. Now, most of them were in investment banking, and then some were in corporate banking.
Yeah.
There were also some junior bankers in that team that didn't fall under me as a manager, but that I kind of helped out with. That's kind of that 20 to 30, additional people. And so I kind of did everything. I did, like I said, recruiting and interviewing and training and staffing. I didn't staff the whole time, but I staffed a lot of the time.
Yeah.
There was a time where I was staffing 3 separate teams, and, for anybody out there who's ever been a staffer, that staffing is a thankless role. It's kind of like being an offensive lineman in football. If you're doing a great job, nobody notices. But boy, if you mess it up, people really notice. And, in many cases, there are plenty of times where staffings come up, and you kind of have to drop whatever you're doing. Staffing a project becomes your priority, right? If you have something like, hey, we just got invited into, a debt or equity deal, and the diligence calls in like 2 hours, right? Well, all of a sudden that necessitates that. Being a staffer also has a lot of advantages, particularly if you're a manager, because you obviously know exactly what everybody's working on. Right? You know how they portray how they're working on, going back to that staffing sheet that has a list of 20 projects, but 3, 4, 5 of them are actually hot.
Yeah.
You also learn a lot when someone comes in and asks for staffing, and they say, I've got this big project, who can work on it, and you say, oh, you can have Jonathan. They go, well, you have anybody else?
Yeah.
Or on the other hand, they'll come in and say, I've got this thing. It's fast moving. It's gonna, we're gonna have a lot of, high visibility on this, high impact. Can you put Curtis on this, or Patrick on this? I know he's gonna do a good job, right? You also see something that, again, probably that every staffer deals with, which is the rogue staffings, which is a senior banker likes something that somebody did and says, and just grabs the junior banker and says, this is a follow-up to something you did. I used to call it the infinite follow-up. And then, the staffer doesn't know that you're working on something, and, and
then they have up for 3 days, and you're like, what's going on?
Yeah, exactly. Right.
Yeah, it's interesting because I remember in my days, I was working probably only like 3 deals, but I was in restructuring, and I was working under an MD that was pretty notoriously like hardworking himself. So he'd be in the office at all hours of the night. And so his team would end up working very long hours. And the joke was, if you're on one of his deals, you're probably like done, like your life's over. And if you're on 2, forget it. And I was on like 2, sometimes 3 of those. So my 2 years in banking were pretty intense. But I definitely saw stuff in terms of my analyst class where there was this like dichotomy of like a few of us getting like almost like if you're doing a good job and a hard worker, you get hit really hard. And if you just have a few stumbles early on, you almost like work less and obviously your bonus is lower, but you work less and things. Talk to me a little bit about like how you even manage that.
Yeah, no, that's a real thing.
Yeah.
A high performer can often feel like, the reward for hard work and good work is more work.
Yeah.
And that a poor performer, it's kind of like if you get a reputation up front, it can be hard to shake it.
Yeah.
That was one of the challenges that I had, as a manager. I had it as an associate who might work with analysts in that situation, had it as a staffer. You have to, one thing I will say that the banks have gotten much better at is really differentiating on compensation between the top performers.
I was about to ask you that.
And
What's the biggest gap you've seen like between top bucket and hero?
It's pretty big. And when you look at comp surveys, so for anybody out there who looks at comp surveys, they are generally accurate, but I would not take them as gospel. They have bias in them, and in many cases, analysts and associates aren't really supposed to talk about their comp, but then they all do, and we all know that. But that doesn't mean they all talk about it truthfully. Yeah. And I think sometimes you see the really high performers who know they're the high performers not say their full number because they don't want to create any problems. And some of the low performers, they don't want to say what their real number is, right? So the numbers, the reported numbers kind of get pushed towards the middle. And some people go, well, why would I work hard? The dispersion's not that great. I will tell you, the dispersion is pretty big, and it's gotten bigger. And if the trend continues, it'll get even bigger.
Can you give an example of, like, let's say a first year analyst, like what was the highest? Obviously the lowest was a 0. I assume you had to fire analysts and you 0 bonus.
It's very rare to terminate an analyst, but yes.
Yeah. A few times at least, because when you have 80 reports, there's got to be some dead weight there. But anyways, point being, like, in terms of the highest, like the best years, were there certain times when an analyst would get like a 6-figure bonus, or never that high?
Oh yeah, there were, analysts could certainly get 6-figure bonuses, particularly in that second and third year.
Yeah.
Right. Yeah. I will just say, because I don't want to put any specific numbers, but.
And I do that for the listeners. I know they're curious.
Yeah, there were some, we heard some chatter that, hey, there's no reason to outperform because the difference between the top and bottom is only X dollars.
Okay.
When in fact, the difference just within the middle bucket, right? So not counting the top or the bottom, or even like the zeros, right?
Yeah.
The difference just in that sort of middle bucket was more like 2X. Right. So I think people misunderstood the range of potential outcome.
Yeah. So they thought, as a first year analyst, I'm going to be and I'll throw numbers out there, I'm being the 30 to 80 range, but thinking, almost everyone's getting 40 to 50. And the reality is there's pretty good dispersion. So there was a lot of people getting like near the 30, and a lot of more people getting like 70s and stuff like that, and 80s. So like, I'm just talking rough numbers. So because I have
good guesses.
I have a decent sense, like, for a first year analyst, what it would look like. I did notice when I was back at Rothschild, there was a big jump in my second year comp, and they knew I was leaving. So I was surprised. Like, do you guys do that? Like, is that what's the thought process towards paying a second year analyst you know is going to private equity?
I think most teams, you pay with the analyst, you pay for the performance you get. Most banks recruit based on, or not fully, but partially on their private equity placement, right, for the analyst. And so, you want people, you want to reward them properly for the work that they've done. And, these people often go out and become allies for you, right? Yeah. You've seen lately a move towards a much greater dispersion in terms of schools where banks recruit. But historically, they've all recruited from, a pretty small number. And, so those alumni that you're going out and having coffee chats with, these might be people who are 2 or 3 years out and have left. And you want to make sure they have a good opinion of their experience, and you do it by treating them fairly, whether they're leaving or not.
That's fair. Yeah. And so I think, what's your thought process of, because there has been from some of the bulge brackets, some sort of pushback on this idea of accepting offers really early, and to the point where I don't know if it was Goldman or JP threatened the first year, is like, if we find out you're recruiting, your offer's pulled, and like the private equity funds still come out and they still go do it, right? And so it's these analysts are put in a little bit of a position where they're forced to recruit for private equity before banking even starts, like before training even starts.
That's right. Yeah. No, it's a complicated problem, and I don't know that there's any one answer, right? If you threaten that if we find out, then we're just going to fire you, well, then you run the risk of people just never disclosing. Right. What I will say is this, though, for everybody out there, a lot of people get into banking wanting to get into private equity, and that's perfectly fine. Mm-hmm. The minute you sit down as an analyst in your seat, your phone starts ringing, and it's recruiters, mm-hmm. and trying to get you that private equity offer. And some of these recruiters are really great at making you feel like, wait, you know where the coffee machine is, and you've networked to the printer, and you don't have a closed deal on a private equity offer yet. And so you end up with a little bit of a frenzy, I guess, that's probably mm-hmm. not necessary. I would just encourage people. Yes, I do think you should look 2 or 3 steps ahead, right? But find out if you like high finance. Find out if you actually have an aptitude for building the models, for doing the presentations, for doing the due diligence. Yeah. Find out if doing, M&A and raising capital is something you really want to do. Yeah. Before you sort of commit to the next step. The other thing that I would say is not all private equity offers are the same. Mm-hmm. And it's easy to say, okay, well, you take one of the, big marquee names, it's not going to be the same as a middle market private equity fund. But I saw some people leave for opportunities that seemed absolutely perfect for them. Right. Based on maybe location and where they were there, and their personal situation and their interests. And you go, you know what? I get it. This is an awesome move. Go do it. Yeah. We wish you the best of luck. This is going to be great. I totally get it. And then there were some others where you felt like they saw the private equity offer as the prize. And going back to the previous point we made earlier, is that the goal is not to get the private equity offer. If you go to private, it's to do well in private equity. Yeah. And so all those same rules about, what private equity firm you should join, it's the same as what bank, the same process of what bank you should join. Where do you have the most opportunity? Where are you the right cultural fit? Mm-hmm. Where does their strategy align with your strategy? All those things need to be taken into consideration.
At Wells, over the 8 years that you were there and seeing so many people and recruiting so many people, did you see any sort of shifts happening that was noticeable to you over those 8 years? Meaning, the candidate quality going up? And then, so that's my first question, is like on the recruiting side, is like the front end going up? And then on the actual analyst performance or associate performance, even on the back end, was it improving? Was it getting worse because of like an expectation on the analyst and associate side of having more of that protected, time and stuff like that? What would you say?
Yeah, gosh,
COVID and
covered several in the middle there. Frame. But on the analyst side, I was there at a time where you saw the analyst recruiting timeline move up a lot, right? Yeah. To like now, there are sophomores who are in interviews. Most of them not quite yet, but there might be some early interviews for next summer's internship, right? Being the summer of 2027. And, we're talking
it's going to be kicking off probably in a couple of weeks. It's kicking off in a couple of weeks. We've even seen a few firms trickle in. I think I saw Leary 2027 something. I'm like, what are they doing?
Yeah. Yeah. And so, what I will say is I'm actually really impressed with the quality of the candidates at the undergraduate level. And this is coming at a time too, where because of technology and using, Zoom and other and HireVue, which no one seems to like. But we're able to reach a lot more candidates, right? Most of the banks are using that technology to their advantage, trying to reach more candidates, broaden their classes. Mm-hmm. And so So it's interesting to see broadening the classes and seeing the quality come up. It seems like the sophomores are so well prepared.
Yeah.
You know, and
sometimes we get our hands on freshmen, and then they come in and they're like already on 150 networking calls, and they're like,
yeah,
on the technicals. So
it's really, you know, I've been very impressed with the quality of the candidates that I've seen at the undergrad level. And it's interesting because, you know, like I said, it's getting a broader reach. There are a lot of schools that, you know, where it wouldn't have made sense from a resource standpoint to go and recruit there. Yet when you can do things virtually, you can have a really good sense of those candidates and really get to know them. And look, they've gotten more aggressive, and, you know, they know the value of getting the resume right and the networking and all of that stuff. You know, the MBA is a little bit different because there you've seen a shift in who's getting MBAs.
Yep.
And it's just, you know, there's a smaller number of people that are getting MBAs that are interested in banking, right? And if you go back even to like the Stone Age when I was in business school, there were people who would go from banking to bank, or maybe even go private equity, hedge fund, or venture capital, then to business school, then back to banking, right? Yeah. So like one of my classmates in business school had been an associate at Lehman, went to business school and went back to Lehman and became one of my VP at UBS. But you know, that by and large doesn't, I don't know of that happening anytime recently. I'm sure there's probably an example or two out there. But you're seeing that all the MBAs are career switchers, right? So it's funny, like, while I was kind of like, oh my gosh, I've got this huge disadvantage as a career switcher. Everybody's kind of like me. There are some that are, you know, kind of finance or finance adjacent, you know, sort of roles, but it's a lot of career switchers, a lot of interesting dynamics. You're also seeing, again, probably beyond the question that you asked, you know, I think all the banks would like to promote more analysts to associates to make up for that difference. Yeah. But the opportunities that the analysts have after 2 years or 3 years, they're really, you know, those other opportunities are tending to win out at the moment.
Yeah, and it's interesting, you know, we talked about, I always talk about like the pendulum shifting or swinging so far to private equity. And, you know, as an asset class, private equity is definitely facing some tough times in terms of, like, obviously private credit's booming, PE secondary is booming, but that's for another chat. But I think in terms of like, to wrap it up today, I'd love for, you know, looking back and, you know, your long and winding career and interesting career where you kind of had a front row seat to a lot of this stuff. I'd love for you to kind of think, is there any advice you'd give candidates? Let's do first at the undergrad level and then maybe at the MBA level, like in terms of how to set themselves apart.
Yeah, look, I think it actually probably covers both, which is, you know, banking is a phenomenal place to start your career, whether it's your first career or whether it's your post business school career. But it takes a lot of work. You have to be dedicated. You have to be willing to put in the time. And you have to be willing to do the prep. The rewards, if you do that, are really great in terms of, there are obviously people focus on the financial rewards, but in reality, the increase in the value of your human capital over the first few years as a banker is far greater than the amount of, you know, cash compensation that you're going to earn. But I do think it's important, you know, not just sort of follow the herd, but to make sure that this is really what you want and that this is the environment you want to work in. This is how you want to spend your days and, quite frankly, your nights and sometimes early mornings. You know, that this is really something that you want to pursue, that you're willing to make that sacrifice. Because look, it's competitive out there. And if you're not fully dedicated to it, you know, you're probably not going to end up where you want.
For sure. I love that. Well, Jonathan, I appreciate you taking over a full hour of your time to kind of share your perspective. And I think a lot of the students and listeners will find it valuable. So really appreciate it.
Well, I've had a lot of fun. It's been great talking with you today. I hope the listeners found this helpful.
Yeah. Trip down memory lane.
I look forward to, you know, meeting more of the Academy students as I go through.
Awesome, Jonathan. We'll talk soon. Thanks so much.
All right. Thank you.